Assalamualaikum and hi everyone. My name is Siti Fatima Amana binti Abdul Razak and I am from A4CS1124A. Today we are going to talk about saving products in Malaysia that includes long-term products. I will tell you the question for this week. Various financial products and services has been developed in meeting the consumer's needs. There are two main categories of these products and services, which are long-term savings products and non-saving products. Identify and explain the nature of four most common long-term savings products in Malaysia. Savings product. The primary purpose of long-term savings product is to secure comfortable retirement. There are four types of long-term savings, which is traditional life insurance, superannuation funds, investment-linked arrangement, and direct investment. Is traditional life insurance savings product. This life insurance savings product generally pay a sum insured at the end of the policy term or on the earlier death of insured. These products share in the distribution of profits allocated largely at the discretion of the company. The usual mechanism is to add bonuses to the sum insured. There are permanent additions to the sum insured or they only vest in the policy owner on the termination of the contracts. It is paid in cash or used to reduce premium. There are three main forms of traditional savings, which is endowment insurances, poor endowment, and deferred annuities. Endowment insurances pay the sum insured on survival to the end of policy term. Meanwhile, pure endowment pay the sum insured on survival to the end of a fixed term and usually give a return premium with interest on earlier death. And lastly, deferred annuities pay an annuity while annuitant reach a predetermined age. The second one is superannuation funds. It is also called pension or provident funds. Superannuation funds are savings vehicles established for the purpose of providing lump sums or pensions at retirement. They are very common and reflects the continued growth in living standards, the increased length of health retirement, and the tendency to treat superannuation contributions made by the employer as deferred pay. For example, the Employee Provident Fund (EPF) is a national compulsory savings scheme for individuals employed in the Malaysian private sector. The retirement scheme is fully funded and provides defined contribution type benefits to members. Social Security Protection Principles, which is SOCSO, is the employment injury scheme and the invalidity scheme that provide free medical treatment, facility for physical or vocational rehabilitation, and financial assistance to employees. It is also defined benefit fund pay benefits on death, disablement, early retirement, ill health retirement, resignation, and redundancy. The third one is investment-linked arrangement. Various products have been developed in more recent times to give customers access to the investment performance of asset portfolios such as unit trusts. What is unit trust? Unit trusts are legal trusts the pool investors' interest in assets determined by the constitution or trust deeds. Typically, the investment profile of the trust will be one of diversified, index, sector, and specific purpose. Investors participate in the trust by means of units, which define their share of the trust. Units are frequently revalued and may be sold back to the trust at the market value of the underlying assets. Lastly is the direct investment. Long-term savings products are always to enable the individual to access the investment returns from a pool of assets. Sometimes the link is very clear. while at other times it is hidden behind capital guarantees, which is company discretions or opaque distribution mechanisms. The alternative of investing directly through stockbrokers is available to an increasing number of individuals as transaction costs fall and education and awareness increase. So that's all for me. Thank you.